We've been seeing a bit of negative price momentum on Bitcoin, and I just wanted to draw your attention to the miner outflows. Miners are coming up to the Bitcoin halving. Now, what does this actually mean for them? In April 2024, or in about 55 days, the halving will be upon us. There are a lot of different Bitcoin mining companies. Bitcoin mining companies use mining rigs to do advanced decryption on the Bitcoin blockchain to receive mining rewards. Mining rigs and the data centers that are required to run them are really expensive, and when we look at Riot, it's holding $230 million in cash. But when we come down to looking at the property, plant and equipment, you can see $836 million sitting in there. Mining rigs have to go somewhere, so buildings are important. Also, sometimes they need to spend money increasing the effectiveness of their buildings. Machinery and equipment, you can see literally $500 million worth. Now, what's this got to do with the halving? Oh, one other thing, there's about $100 million worth of construction in progress for Riot, and this will make a lot of sense in a moment. A lot of people don't really think about it, but to get a Bitcoin, it must be mined from the system. This is where the mining hash rate comes into its own. The more hashing or computing power inside the network, the greater is the security and the greater is the resistance to overall attacks. Now, one thing that you can see here, these scales are on log. I'm going to swap them across to arithmetic scale. And what's the difference here? This is over here is the price of Bitcoin, and over here is the hash rate. Arithmetic scale reveals something really quite interesting. Arithmetic scale is just simply equal price movements, and logarithmic equal percentage movements. You can see the hash rate has been going up except for the China minor crisis, and it's been really pumping up. This increases the amount of network difficulty. That means more mining rigs. When the Bitcoin halving comes along, what happens? They halve the Bitcoin rewards per block. What does that mean? Basically, they need to double their infrastructure just to stay current. Therefore, when you look at Bitcoin miners, it's a real issue that all this compute power that's coming off these rigs, that compute power needs to be increased with the halving. And that's really, really expensive. And what you can see, it requires a heck of a lot of infrastructure. And that infrastructure is very expensive. It's little wonder why we're seeing the miners selling their Bitcoin. They need to gear up for what's coming. We've literally just looked at one of the mining giants, which is Riot Blockchain, but there are many others. They're all facing similar cost pressure. That means that's the reason and logic behind them selling Bitcoin. They need to. And unfortunately, not all of these miners are going to survive. Miners get block rewards and fees, block subsidies. This is the reward for securing the network. And when we look at Marathon Digital Holdings, we can see the revenue is going up. But this is expensive to do. When looking at CleanSpark, we can see this revenue is coming up, but that means that those mining rigs are working overtime, and soon they'll be working even harder. We can see the same kind of thing for Riot Blockchain. We can see it's making good money, but it's going to cost more and more to just maintain that revenue, let alone increase it. The reason I raise this, the sell pressure of the miners will only increase in the coming days, and of course until the halving. This is not an issue, it's something that needs to be understood about the crypto market. When we look at Bitcoin, which is currently trading at 50,884, we can see Bitcoin has been under negative price momentum, but we need to know where the structure is. This is because price just simply moves between structural levels. Now, what can we see here? We see that structure inside Bitcoin's price activity around that 50,930 mark. It's been hit once, twice, 3, 4, 5, 6, 7, and a whole lot of times. Let's call it 10, 11, 12, 13. Bitcoin is definitely weakening at the current time. Is this a bad thing or a good thing? Unfortunately, many people are in the crypto market only to see the prices go up. Now, why do I say unfortunately? Ken, isn't that the way that we always want things to go? There's a bit of a problem. Price has never gone all up. It moves in a wave function. It's always moving up and down, up and down. This is what price does inside every single market. But for some reason, people think, the price, if it goes up, I'll buy. But if it goes down, I'll sell. This is the completely wrong way of thinking about anything that you're investing or trading in. Price is simply a wave function. When it goes up, when it goes down, you have to bear in mind what is the overall trend. If the overall trend is down, that's one thing. If the overall trend is up, that's another thing. What about if the overall trend is retracing, but we're coming up like this? Well, that's a good thing to buy those retracements. But what do people do? As soon as the price comes down, they run, and they run like hell. Please, please, please do not be one of these people. You simply need to know where the structural levels are inside the market. You can see this structural level has been hit so many times. A lot of people would say, but Ken, this is really good. It shows that structural level is really strong. I see a completely different issue. I see that if Bitcoin was strong, it wouldn't even be down here. It would be up at higher structural resistance levels. What is occurring here is a lot of sell pressure. Now, what could that mean, and how do you prepare yourself for the volatility that could be incoming? Well, we look to where the next levels of structural support are. There's an absolute bucket of structural support around the 46,780 mark. One thing to be aware of, there is a structural negative fresh air gap between around that 50,300 mark down to 46,780. That means the price could come down relatively sharply, and it's going to push a lot of people onto the wrong side of the percentage if it does that. Because how do people react to financial markets? They buy when it goes up, they sell when it goes down. They buy when it goes up, they sell when it goes down. They buy when it goes up, you get the idea. You actually want to do the different approach to that. You want to be just buying when it retraces, so long as you know where the overall trend is going. And Bitcoin, with a limited supply of 21 million, 19 million are out. It can only go up. The institutions are here. The hedge funds are here. Everybody is here, and everybody wants a piece of crypto now. Except, of course, for Elizabeth Warren, who is lovingly protecting the banks. One of the biggest problems retail traders and investors have, they simply don't know where the safety nets are. They're all around this 46,500 mark, and there's a ton of them. There's an absolute thermonuclear barrier that will stop price. It could overshoot, but it will fling back. And this is the thing that we need to know. When we have negative fresh air gaps, that means the sellers can get a lot of momentum behind them. But when you encounter these safety nets inside the market, they will fling price back. That's why it's vital to know where the safety nets and where the ceilings are. As an investor and a trader, and you want to combine the best of those both worlds, as an investor, you want to see your price go up, but just bear in mind the prices go up and down all the time. They're always waving up and then waving down. Waving up and then waving down. Waving up, you got the message. It's just the way things go. But what happens if it just goes only up forever? Well, that doesn't really happen. That's not the kind of behavior that happens inside the crypto market. Are you crazy? What is that? Look at that. Well, these particular spikes are relatively driven by the underpinning structure of the market and a lot of other things as well. Market structure inside the crypto industry is broken into three distinct phases. You've got a topping action, capitulation, a degree of consolidation, and then the bull market starts again. So you can see that you've got 1, 2, 3 different subsections of price behavior. This occurs every halving, which is approximately every 4 years. So you have capitulation, you have consolidation, and then the halving, and then we rock and roll. But you might notice around the halving, and don't forget this is on a logarithmic scale, so these little things, they don't look like much, but when you go through it, they're a heck of a lot. They have negative price momentum after halvings. Now, why does this occur? Why isn't it just shooting for the moon? Because, as I mentioned, the miners have to literally double their infrastructure just to tread water. So what we've seen in the past with capitulation, consolidation, and then the bull market exploding is it takes a certain amount of time to just get going. It's occurred again and again and again. Sometimes people say, no, Ken, this is different. We've got all the institutions in with their Bitcoin ETFs. Yeah, that's really good. But the institutions will play the game. They want to accumulate more Bitcoin at a lower rate. They know exactly what they're doing. They want to take over the crypto market. Their goal is 100% market dominance, and it's always been the same. Every large company has the same mantra. The halving is expected on the 22nd of April 2024, so you can see we're not far away from it. What is this green line here? What's that? That's just a fractal from the past bull market, from capitulation to the peak. And what did we see here? A bit of a long tail down. That's this particular price action here. A lot of people were just considering that it was only up. Of course, this was C19. Nobody really expected the whole world to close down. But just something to bear in mind, even though you get positive price momentum, things can equalize for a certain amount of time. We may get positive price momentum and things may consolidate for a certain period of time. But you need to have your three-dimensional strategies. Have a strategy that you can dollar cost average in if you're fortunate enough to get these sell-offs in price. If it's consolidating, you need to know what to do. And if it's just going up, you also need to have a strategy. You literally need 3 simultaneous strategies. But Ken, that's too hard. I only want one strategy. It's going up and up and up, and it will never come down. Oh, okay. You can do that, but you'll probably go broke in the process. It's much better to have those 3 simultaneous strategies in play because things are always moving in a wave. This is the nature. And if you really believe in Bitcoin and what it's doing, it's very scarce. There's a finite quantity of it out there and everybody wants it. And the thing is, most people don't even know that yet. What happens when they figure it out? You got it. You just won't be able to get your hands on any. Hopefully, I've given you a couple of perspectives to look at price action in a bit of a different light. Always make sure that you understand there's a capitulation phase, a consolidation phase, and an exponential blow-off phase. There are 3 phases. A lot of times, people will just say, oh no, there's one phase. It just goes up and up and up, and that's all that it will ever do. That's just to pull retail in. I want you to think from a more professional level. Price is always going and moving in a wave. And when you look at Bitcoin variability, it's really substantial month on month. If you would like me to cover that off in a later video, please let me know in the comments. It's a pretty good topic. Have a great day or night ahead, my friends, and a wonderful weekend ahead. And Kate and I look forward to catching up with you again in the next video. Bye for now.